Is that everything? This episode is brought to you by Apiary Fund. Hey traders, and today we're going to be talking about the average true range, or the ATR. The ATR is another one of those J. Wells Wilder indicators which we've talked about, such as the ADX and the RSI. To calculate the ATR, what we first need to find is the true range, or that TR part of the ATR. To find that TR, or true range, there's three different methods to its calculation. The first method is the high of the current candle minus the low of the current candle. The second method is the absolute value of the current high minus the previous candle's close. The third calculation is the absolute value of the current low minus the previous candle's close. Whichever one of those three produces the highest value will be what our true range will be based off of for that ATR calculation. So that true range is constantly varying which way it's going to produce the numbers based off of, depending on what the newest price action is doing. Now that we know how our true range is calculated, we can commence with our ATR calculation. For the full ATR calculation, Wilder put a little bit of a throwback to the EMA calculation in there. How he did that is he took the period, whatever that may be, 10 period, 14 period, 20 period, subtract 1 from the period, and multiply that previous candle's ATR value by that number. So if we're using a 10 period, we'll multiply the previous ATR by 9. If we're using a 14, multiply the previous by 13, and so on. And we're going to then add the current candle's true range, divide by the period, in this case, 10 or 14, and that will be that current candle's ATR. So that current candle, as the true range adjusts, it's going to have a higher influx on the change of the average true range than do those previous candles, making it a very EMA-esque calculation for the ATR. So now that really brings us onto the entry aspect of the ATR. Strictly speaking, this isn't an enter here or enter here indicator. It is more so this is a good entry spot, which you have your entry for, or this is a better spot for your entry, depending on if you're getting your indication to enter a trade or not. What we'll be looking for with the ATR is if you have a trade setup which you're wanting to take, say an SMA crossover, EMA crossover, or any other of the copious amounts of entries you could choose to enter the trade with, you'll want to look at that ATR and see, okay, is it high up on the normal range in which it oscillates, or is it sort of low down in that field? If you're lower down on the numbers or the values where the ATR usually hangs out around, then you know that you don't have too much volatility in the market, and while you may be getting an entry, it won't be going for necessarily as many pips as usual, more statistically. If it's higher up on that ATR field though, that number is larger and it's coming up close to those highs that are normally supported, or in this case resistance in the ATR, then we'll go ahead and we know that we have that high volatility in the market, and we know that we'll probably have a pretty decent price increase based off of our entry or decrease, depending on if we have that buy or sell trigger in the market, and we'll know then if that's really a trade worth taking or not. One sort of shortcut with the ATR, which doesn't use the full calculation, it makes it pretty beneficial if you want to use the indicator, but you don't necessarily want it on your charts, but you like the concept of it, is to take your period, whatever that may be, those 10 or 14 candles, and then we'll take the high and the low over that whole period and then divide by 2. By doing this, you're getting from the middle ground the range in which it goes to the highs or lows. And so by figuring that out, it gives you a pretty rough estimate of what the ATR value will be. But if you're just doing a sort of really quick trade and you don't want that ATR taking up room on your chart, but you like the idea behind it, it's sort of a shortcut you can do to use it in your trading without actually using the ATR. Now, while we said the ATR isn't a strictly enter here indicator, it's much better on its exits if you're using it as an indication for your trades. How it's going to be better for your exits is if you take your ATR value, that's at that point how far price typically runs. So if you get your entry off of that HMA crossover, SMA crossover, or whatever entry you're using, Once you get that entry, you can take that ATR value, look at how much the price has run up until that point, and then see if you still have some extra run left. If you have some run left in the market, you haven't reached that ATR value, or you have that large ATR, meaning you have a pretty large span of where the market is going to go, that gives you a rough idea of where to put your take profit. If it typically runs 50 pips and you've only run 20 pips and now you're getting your entry, you then know that you have about 30 pips left of that run and that you can go ahead and put your take profit in that area. And so this brings us into that sort of second exit, or that secondary exit where if we're not out of the trade yet, we should be looking at getting out soon. And what this point is going to be is it's going to be areas of high resistance on that ATR. As we're coming up on areas of high resistance, what that's showing us on the ATR is that previously the market has spanned so many pips X amount of times, or so many dollars, depending on if you're looking at commodities or stocks or Forex for pips. And it lets you know that on average it's moved this much. And so as you're coming up on an area of high resistance in the market on that ATR, it's really keying you into that you're gonna start actually ranging in the opposite direction. So if you're in that bull movement and it's going up really high, close to that resistance, it's going to start turning bear soon. And if you're in that sell and it's coming up on that area of high resistance, the market's going to start turning bullish somewhat soon. As that ATR, that true range that the market goes in either direction, starts to slow and reverse and become a much smaller range, ultimately leading into a reversal usually. If the ATR seems like an indicator that'd be useful in your trading to find those ranges of where the market is oscillating between typically, then to add it onto your chart, if you're using Alveo, which is Apiary Fund's trading platform, you'll go into the top right of the chart, click on the indicator icon, and then find ATR in the drop-down, put in whatever period you want, and confirm those settings. If you're using a different platform aside from Alveo, you'll go to wherever your indicator menu is to add on those indicators, find the ATR, adjust the period, and then confirm. Just a reminder, the Apiary Fund has much more educational videos like this, discussions on other indicators, strategies, along with daily live classes that you can attend, which you can learn more about by going to apiaryfund.com or following the link in the video description. Otherwise, if you like this video and you like the content that we produce on these trading tips and that you want to see more of those, you can like this video and subscribe to us on YouTube. That way you'll get notifications when we put out these new videos. And then you can also go ahead and comment on this video comment section what other indicators or strategies that you would like to see discussed so that we can make those videos for you and help improve your trading. So thank you all and happy trading.